Good morning, everybody. Happy Monday. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Tick, everyone. I have a tall task in front of me this morning, and I'm going to ask you for help with my tall task. Dennis and Joel are pretty bearish. They're pretty bearish this morning. They're coming in. They're pretty concerned. I'm going to need some help lifting them up. It's not the end of the world just yet, I think. So, that being said, let's get this show on the road. We got a lot to get to today. We're going to talk about China. Obviously, there's not a lot of reason to be excited about that right now. Every single day, Chinese stocks go lower and lower and lower. We'll talk about that. Europe is actually trading in the green today nicely, which is interesting. So we'll talk about that as well. I want to talk about Affirm. They had a headline over the weekend, not a great one. And Tim Quast is our guest today. It's time for Market Structure Mondays with Tim. That'll be at 8:35. So smash that like button. Tell your neighbors. Tell your friends. It's Pre-Market Prep. And we're going live. We are live. We're starting the show right now. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Bring on Joel and Dennis here. And Joel, if you want to share your charts, that would be great. Let's run through the overnight markets and then let's get to the meat of this conversation.
Okay. The good news is we're up 15 handles at 4207.50. The bad news is we're 40 points off the high, and we're less than 10 points off the low. So there you go. Crude down $5.15 at 104.17. Do we move over to the April? No, we got that April contract expiring. Big open interest still. Gold down 15.20, 1969.80. Silver in the red by 55 cents at 25.61. The cryptos are doing okay this morning. You have Bitcoin, that's up $600 at 38,925, and Ethereum. That's going north too. That's up $50.50 at 25.80. So a lot to discuss here this morning in the markets. We're just Spencer's going to be the cheerleader.
I'm going to try to be.
Do you got some pom poms under your desk?
No, but we
because we're gonna need it today.
I got something to cheer us up first. I got in the mail this weekend. I got some new Benzinga swag, and I'm actually wearing it here right now.
You got yours.
I got some Benzinga swag. You got to see this shirt. Look at this shirt.
I sure hope it's not a picture of me on there.
Joel's like, this is not making my morning better.
Joel, there's something coming. It's coming to you.
It looks great. This is a volatile puppy.
It's coming to you too, Joel.
Joel, it is just like
you know why
doesn't know. You gotta completely not acknowledge it. I just gotta show it one more time.
Wait,
hold on. Swag, man. Look at that.
Okay.
That's a good looking guy right there.
It's coming to you too.
Do you know why they sent that to you?
So I can wear it on
no one's buying them.
Nobody's buying them. That's
so they had to
get
rid of them.
Let's get rid of that one.
What size is Dennis wear?
Let's get rid of this one.
First of all, I don't wear glasses anymore, right? But good, Dennis. Now you got a new shirt.
I opened up the mail. I looked and I laughed outright, and then I threw that back to Spencer, to my kid Spencer, and then he laughed too, and he's like, and he's reading the shirt. And he's going through.
Dennis, you're next, man. You're next.
Oh, great.
Yeah.
I don't know.
That one will sell. I will buy this stock for a penny. Okay.
Fun time.
Good job, Dennis. Good job.
It's pretty cool shirt.
Good job, Dennis.
The one thing, Spencer, just in the future though,
yeah,
this is a large T-shirt, and it's a little bit skin tight on me. I'm an XL, sometimes a double XL.
Me too.
I'll wear it for you, but
I wasn't sure about
showing off that man bod.
I wasn't sure about the exchange rate between the U.S. and Canada sizes there. I thought they maybe, but
Go with the XL.
all right. Good to know.
215 pounds. Go with the XL.
Good to know. All right, let's let's start with China here, guys. And by the way, you can, if you want to check out our swag store, we got a lot of stuff there. Swag.benzinga.com. All right, China is the story here. It's a never-ending series of headlines. You really can't escape it. What over the weekend, there was, headlines out of DD, which fell 44% on Friday. It's so much pain. There's headlines out of Tencent, and it is remarkable how low these Chinese stocks are going. Alibaba got to what this morning? 82.
Alibaba is trading right now.
Got to 80.
Yeah, it's at 82 this morning. It got to 80. I mean, and I get this question all the time, like, when are you buying Baba? When are you buying Baba? I sold Baba. I'm not rebuying Baba. I don't know when, if, is it cheap? It's been cheap the whole time. It doesn't matter. What is a bigger issue for all these Chinese stocks here now is the potential of delisting. And this is a whole new can of worms to worry about with all these Chinese stocks. Not even a matter of their government torpedoing their own companies. It's now a matter of the U.S. government potentially torpedoing these companies too, with the delisting possibility. So headline broke on Thursday night, which never got any press on Friday.
No, it did. It got press, but
not enough because of the Ukraine situation. So tell us about this. We should have talked about this Friday morning, but there was 4 companies, I believe, mentioned in it as a potential delisting here. All Chinese companies. Tell us what's happening here, Spencer.
So there was this law that was passed 2 years ago in the U.S. as Holding Foreign Companies Accountable Act, which basically just says that the SEC has the right to delist any stock that trades in the U.S. From a foreign nation if the U.S. can't view 3 consecutive years worth of company audits. But the catch is that on the China side, they don't let their auditors share their information with the U.S. So something's got to give here.
Yeah.
Obviously, I just mentioned the fact that this law is 2 years old and hasn't really been enforced yet. The list that the SEC put out on Thursday consisted of 5 stocks, Yum China being the big one. And there are 4 other smaller ones here. But obviously the implication here is that every Chinese stock is henceforth at risk of potential delisting. That's why you see continued fallout in KWEB and Baba and Baidu and JD, even though they were not mentioned on Thursday. And I think I saw a stat that the Hang Seng is down 34% year to date, and we didn't even mention the fact that over the weekend, the Shenzhen went back into lockdown over there because of COVID.
Yeah,
which is, don't forget about that. So
there's all kinds of fun things happening. China is the concern here this morning for me. So obviously the Ukraine situation, we had some good news, potential, and this is why the European markets are up, and we'll just leave that after we say that. But there's a potential, ceasefire. They're talking. They think later in the week they're moving towards that. So that is good news. That whether that we can believe that or not, we don't know. They pulled it. We thought this Thursday, and then they pulled the rug out from under it an hour later. So we don't know anything on that front. You don't know what you can believe, but I do know you can believe the potential for delisting of a lot of these companies. So I believe there's 4. If you can go find that headline from Thursday night, Spencer. Yum China was the big one.
It's 5.
I think there was 3 other companies I thought mentioned in that same.
It's Beijing. Here, let me get you the tickets.
Yeah.
So Yum China is YUMC.
Yes.
That's the easy one. And then you got this other company, Beijing, which is it's BGNE is that one.
Okay.
And Zay Lab, which is ZLAB, is lab.
Yeah.
Makes sense. ACM Research,
Yeah.
which is ACMR, also makes sense. And then the last one was HutchMed, and that one is HCM.
I don't even need to bring up all the.
They all just got destroyed, and they've been destroyed.
Yep.
And you get the arguments. I mentioned a little bit of this on Twitter, and you get the arguments back. Well, Tencent's not listed over here, not on a regular exchange, and it's doing fine. And and that's what they're arguing, is that all these ADRs that are getting murdered on this are still going to be okay. And that might be the case, but you have a lot of U.S. investors that invest via ADRs. And if all of a sudden these are getting delisted, it's going to turn off a lot of institutional investors. It's going to turn off a lot of retail investors. It's going to equal selling. Nobody likes their company getting delisted, even though it's just an ADR. And yes, you'll still be able to trade out of it, probably down, but it's not as simple. And people don't like holding companies that get delisted. Delisting usually for me equals sell. So with the potential for all these US ADRs to get delisted, it's hard to buy any of them. There wasn't a lot of reason to buy them before because they've been going straight down. But you look at Alibaba and people are shouting out at me. I mean, the P on this thing is what, 10 or 11 now? I mean, it's low. You're coming back to, it's not out of the realm of possibilities. Like the Baba is not that far from all-time lows. I mean, I think it came out at 50. I think the all-time low on Alibaba is around 56. Like the all-time low.
57.
$57. And that was and they've grown the company from 2015 exponentially. I mean, there was a chart going around on the weekend just showing how much Alibaba revenues have grown. And the stock has gone the exact opposite direction. You think, what a value here. But I don't know. Like, one is you still don't know, what you can believe and what you can't believe. Two is China, obviously was, a big part of this original fall with government regulations and everything else that's going on over there. Three, a delisting is not fun either. So part of me thinks, wow, how can you go wrong buying Baba at 82? But then part of me thinks, I don't know where we're going with China. This is kind of a little bit, I don't know. It's not a financial war, but, it's not. There's a lot of other worries with China over here too right now. I mean, the rumors on the weekend that they were going to send military to Russia, which China denied. I mean, there's so many things to think about. There's so many balls in the air when it comes to investing in China right now that it makes me just like, I don't understand or know what I can believe right now. So I think I'm just out. But at a certain point, is Baba a buy? Probably. But I mean, you could have said that 100 points ago. So it's hard to just catch this falling knife and say 82 is the bottom.
This is sort of what we talked about on Friday with Cameron, right? I mean, capitulation. The sell off in China is a little bit ahead of the sell off in the. It's been more vicious than the sell off in the U.S. So
yes.
Have we reached the point of capitulation? I give up, sell, I don't care.
A little bit,
and then that leads to a bottom. You mentioned Tencent though, Dennis, and I do want to mention the fact that over the weekend there was a headline: Tencent is facing a record fine from Beijing as it pertains to their WeChat pay network.
Gosh.
And so more regulation.
What's the symbol on that one? I always have a hard time with it.
It's OTC, so it's TCEHY. TCEHY.
Oh, it's close.
Yeah.
And again, this is where if they were getting delisted, you would obviously see. But even Tencent, look at that chart, Joel. I mean, you can say, well, Tencent's held up well. Has it?
But Tencent's also a bad example because Tencent is the conglomerate of the bunch, and it has its tentacles in everything.
Yeah.
So maybe the solution here is that these things they delist and then they trade OTC, which is a platform for them to still trade in the US without being on an exchange. So in theory, Tencent could hold up better if it wasn't a literal conglomerate in the fact that it has pieces of all these other tech companies. If it wasn't so exposed to China.
There's so many things to think about here. There's just so many implications. It's hard to just come in and say. And I struggle. Besides the valuations being dirt cheap, it's a struggle to like find like the catalyst, like the reason to come in and buy them now. I mean, because you could argue valuation 6 months ago, and believe me, a lot of people on my Twitter, when I was selling my Alibaba, my last shares at $147 that day, and you won't see it on the chart, but I sold in the pre-market. Actually, well, 148, I guess, to trade to that day that it disappointed. I had multiple people saying, you're really going to regret that sale. It's at 82. I'm pretty happy with that sale. I mean, and they were arguing, the arguments coming after me is Baba is dirt cheap. Baba has been dirt cheap compared to other tech stocks for a long time. I don't know where this is going. I don't know how much the government's going to continue to regulate, their profits over there. I don't know if they're going to delist the company. I just don't know. And I don't know means I don't buy.
Where's Jack?
Around, I think. I don't know. I really
We
don't.
don't know.
There's
so much stuff we don't know about, Joel. That's the whole problem with going and investing in China. You just don't know. And then you add the whole can of worms of we don't know where China's siding on the whole Ukraine thing yet. They've been pretty, pretty quiet about it. So there's major,
we know where they're siding.
They side with Russia and it escalates. That's major problems because we don't want. It's one thing to get into a financial war with Russia. The U.S. cannot get into a financial war with China. They make all our products. They control a huge portion of the U.S. debt. And I just can't see how it ends well for the U.S. if we decide to go into a financial war with China. We don't have the manufacturing facilities here. I mean, we get into a financial war with China just for fun, not saying it's going to happen, but just for fun. Let's just say they said, hey, Apple, you're not making your phones here anymore. Well, what the hell would happen to Apple stock? Those people work for $2 an hour over there. So, I mean, that's not probably happening. But I'm saying I don't think we should escalate it to a point of trying to get into a financial war with China. I think that we need to consider that this is a much different, from an economic standpoint, much different to get in a financial war with Russia versus a financial war with China. So I think we just can't do it. So I don't know. There's a lot of things to think about here, but there's a lot of things to be worried about with just going and investing in China right now.
Just for context, the reason why we let the show off with this morning is because when I pulled up my Benzinga Pro this morning, and I'm looking at what's up and what's down in the pre-market, half of my down movers is China. Half of these stocks,
every day.
Yeah,
every day they're down.
Half these stocks that are the biggest losers in the morning are Chinese stocks. It is remarkable the breadth and consistency of there's basically no pocket of strength in China. Everything is down. It's all going one direction and it's down.
It's been that way. I mean, look at Alibaba chart. Let's go back to Baba. February 18th, which is basically less than a month ago, was $120 a share. And that was after it got beat up from $300 for the last year and a half. We know that. So a lot of people saying we get some base, we're solid. We take out the lows. And again, if you are trading and you are actually trading on the short side and taking shorts on stocks making new lows of the move, the breakdowns are working so much better than the breakouts. That broke down, Joel, from 108 was the low back in December. It cut through 108, and you've basically taken no heat from that point in time. It had the whoosh to 100, came back to test it. Technically speaking, that's a perfect scenario. 111 was the high back on the 11th, and then we've been straight down ever since, no heat. I mean, the shorts on the breakdowns are working so much better than the longs on the breakouts. And we continue to be in this bear market. And as a trader, you've got to look both ways here. It's hard to say that, okay, yeah, Baba's is going to bounce. You know how many bag holders are in this thing, Spencer? Everyone. They're all bag holders. There's basically, unless you were lucky enough to buy it in 2015 or 2016, the majority of people who own shares in Alibaba right now are bag holders, and they want to get out on bounces. They want their money back. You'll have a whole new realm. If this gets back to 100, there's a whole new group of sellers, the ones that have bought it recently that are say, hey, give me my money back or give me some of my money back. That's why stocks making new lows, it's hard for them to just come back. So it's tough to just come in here and say Alibaba is cheap, let's buy it. It's going to be okay 10 years from now, because we don't know. This isn't a U.S. company. It's a lot different. I just can't see. And that's why I'm making the case again here. I just don't want to invest in China right now. I want to go even farther than that. So I own some emerging markets funds in my long-term portfolio. I don't own any Chinese stock direct, none, but I do have a couple of emerging markets funds. On Friday, I wrote this on my sheet, and I don't know if you can see it there. It says, sell emerging markets funds. I was telling myself with 10 stars, get out of all those funds. I'm like actually looking here and saying some of these EEM, it's basically EEM that I own. It's the Canadian equivalent, but it's basically EEM. I'm looking at them down 15, 20%. I'm thinking, man, they could go a lot lower. Now, the emerging markets funds have a lot of other companies. Like, it's better than having China, like an FXI. FXI has been hurt a lot more because EEM, it's got Japan, it's with Singapore. We got other countries in there. But I don't know if I want to own any of it. Like, a lot of it is in China than in that EEM. It's definitely got a huge chunk invested in China. I mean, we're only getting back to 2020 pricing here if they really start hammering those stocks, those emerging markets funds. So I think on a bounce, I think I'm actually a seller of emerging markets funds.
The CEM, though, it looks like it's kind of been holding up. I mean,
It's held up really well.
Yeah.
All my emerging markets funds, I'm still green in all those things, and I've been buying them for the last few years, but I'm up in all of them. I'm thinking, I don't want to go red in these things. I don't want them to Alibaba me. Now, again, I think Japan is in a completely different situation. So maybe you got to break down and can we do that? What is an EEM?
Yeah, I'm looking right now. I'm glad.
Let's break it down. How much? We know
right,
it's
so
good
it's
chunks China.
It's 28% in China.
Yeah.
You want to go country or region?
Yeah, go country.
All right.
Yeah, country's best.
Second largest weighting is Taiwan, which is that's not going to help things here.
No,
16%. Then followed by India and South Korea, which collectively make up about a quarter. India and South Korea are about a quarter of the fund together. Brazil's 5%. Saudi Arabia is 4%. Then you've got a lot. Basically, those are your largest. It's South Africa is 3.8, and you've got, it breaks out Hong Kong separately. So those are your largest holdings. It goes China, Taiwan, India, South Korea, Brazil, Saudi Arabia, South Africa. Those are your 7 largest weightings in terms of country breakdown in the EEM ETF. So if you want to go a little bit more broad and say, okay, let's combine that stuff, it's 75% Asia Pacific, 13% Europe, and about 12% North, South, and Central America. So it's still mostly Asia. That would make sense because
it's a lot. So we got basically between China and Taiwan 40%.
Yep.
And that's why it's held up better than China, because China's been the one that's really been getting nailed. I don't know. I think it's been an argument that EM has underperformed for the better part of 15 years here now. So that's why I've had some emerging markets funds, and you keep thinking this is going to be a catch-up trade, and it looks like it's going to go the other way. So it is really tough investing environment right now.
All right,
in all areas.
Sorry, I didn't mean to interrupt you.
No, you got to interrupt.
I was going to move on to Europe though, because against the context of all of China getting hit today, I was surprised to see the European banks this morning. Actually, it's not just the banks; it's all of Europe trading higher.
No, but that's not surprising though, because we've got the potential. They're trading higher on the potential for a ceasefire.
How many times are they going to fold?
No, but they said it again. So in an hour they're going to say there's no ceasefire, no, not even close, and then they'll pull the rug. That could happen. That's what happened before.
Fool me 4 times, shame on you. But
I know, but the market continues to be fooled. So U.S. markets are leaking, but I think the U.S. markets aren't leaking so much. The U.S. are very much underperforming European markets here this morning. But I think the U.S. markets are worried about the China situation too. I think this whole delisting thing really didn't get the press on Friday. It's concerning. You come in and see Alibaba down another 5% in Hong Kong, Hang Seng getting killed over the weekend, and you think, man, this is just getting ugly. Baidu is now $110 again. JD.com is $45. I mean, holy crap. Remember I took that JD trade from like 62 to 78?
Oh, yeah.
Holy cow, I'm lucky I didn't rebuy. That's 45. JD is $45. Like, that's like, what we were saying is one of the best ones. I mean, it's moved from 40. It's I give a perspective. It was $73. 1, 2, 3, 4, 5, 6, 7 trading days ago. 45 from 73 to 45. The company didn't even do anything. They didn't say anything. This is just like selling first. And to Cameron's point on Friday, are we hitting a point of capitulation on these things? Maybe, and that would be the argument to maybe come in here eventually. But I don't want to be the hero. I'm not the person that's going to try to call the bottom on this. Do I want to own JD long term? Maybe. 45 seems cheap. Hell yeah. But does it mean that this is the bottom? Does it mean not going to 35 tomorrow? I don't know that. Really tough, man. Tough market. Tough to over. We think our markets are tough. Chinese market's way tougher.
I'm anxiously awaiting any headlines out of Apple today, or not. Maybe not today, but maybe in the coming weeks here, because we mentioned the Shenzhen lockdown.
Yeah.
You know who's in Shenzhen? Foxconn. You know what Foxconn makes? iPhones.
You're not making
You
me
guys
feel
are
all
killing
warm
me,
and
man.
fuzzy inside here, Spencer.
Sorry.
I don't even know what to say.
Let's just slippery
I
slope
might
this
go,
whole show down.
take the day off.
Look, so Apple's getting the beats because they're locking down because they got 3,000 cases there. 3,000 cases of COVID. I mean, there's 3,000. I'm living in a town of 30,000 people. There's probably 3,000 cases in this town. So, I mean, COVID's everywhere. 3,000 cases is an absolute joke. But whatever, they're locking it down. So that means, and they've shut the Apple, I believe they temporarily have shut down that Apple facility, correct?
The Foxconn plant, yeah.
That's why Apple's down $3 here right now.
Yeah.
We know I own Apple the long term. We know I sold a little piece after owning it for a decade because I'm concerned about the valuation here not being cheap. Apple's not a cheap stock. You know what I'm starting? Let's slippery slope this thing all the way here.
Oh.
Berkshire Hathaway made
come
a new all-time high on Friday.
Okay.
What is Berkshire Hathaway really doing at an all-time high? Let's stop and think about this. We've got a lot of concerns.
It's because it's all the rest of the stuff. It's
45% Apple.
Yeah, it's the rest of the stuff, though.
There's a case to short Berkshire Hathaway here at an all-time high. I hate shorting stocks at new all-time highs. There's actually a case to go short. I'm not saying I'm going to do it, but there's a case to short Berkshire Hathaway, and the case is Apple. If Apple really starts to get ugly, you got Berk at all-time highs, which is completely investors in Berkshire Hathaway are completely disregarding the huge holding of Apple because Apple is now significantly off the highs. Berkshire Hathaway should almost track Apple closer when it's 45%. Yeah, it's got Coke. Coke's up there making new. Well, Coke's broke down too, though. What's holding? Why is Berkshire? Can we open up and see why Berkshire is at all-time highs? What do they have?
They got a 10% stake in Occidental Petroleum.
Occidental?
Yeah.
The oil holdings helping to hold Berk
Yeah,
up?
and they got he has CVX.
He's got some oil, and that's really helping for sure.
He's got
how
oil
much
and
oil?
Apple.
Is it 15% oil? He
And
doesn't have any airlines either.
Kroger's.
As much as we were beating him up for selling the airlines, those airline sales are looking pretty good right now. Kroger's a good one.
She also mentioned that the Berkshire annual meeting is 6 weeks away. It's the end of April. Maybe we're a run up into that. I don't know. Okay, so
we know, Duncan. We know that they. I'm saying that they got all kinds of stuff.
Okay, so yeah,
they're 45% Apple.
He's got 13% Bank of America, 8% American Express.
Okay, that's no good. Bank of America's position sucks. He's 13% Bank of America.
He owns it at like $8. Dennis,
all right,
this isn't an ETF. We'll say that. Yes, it's a fund. It's a closed fund. They're giving it a lot of benefit of the holdings here. I got to think it's probably the NAV is probably dropping faster than BRK.B. I've got to think that with these holdings.
We don't know.
Well, you don't know what he's
How
done.
do we know what that is?
Out.
You're going to sit down and do the math yourself because that's not calculated. So
I know. Be nice as an ETF. I mean, at Cathie Wood, it's done continuously by creation redemption as an ETF.
Yeah.
This is completely different. It's closed-end fund, basically. So you can see the holdings and you can figure it out, but it's going to deviate from NAV. I mean, I don't know where the NAV is, but I just say I'm if it's only 47% Apple, Bank of America's 13%, that's 60% of the fund that's not positioned very well, in my opinion. So oil helps.
Joel's right. He's got some nice oxy in there.
How much percentage wise of the fund?
2%. He's got
2%'s nothing. Throw that away. That's
there's only 10 of them that
they're giving it too much benefit of defense, warrant value. If I own Berkshire Hathaway, I would sell it here today. I've been bullish warrant for decades. I actually am coming on the show here today and saying I don't want to own Berkshire Hathaway right now at an all-time high. It's at an all-time high right now. I'm selling a stock, and I'm not no position in it. I'm just saying if I was in it, and they got all that Apple, they got Bank of America, and yes, they got some oil helping it. Yes, they have some insurance, but I don't think insurance companies are doing fantastic right now either. I mean, you can bring some of those up. I guess they've held up well. Don't know how well they're going to hold up in nuclear war, but it's a whole nother story.
How do we go from this to that?
Well, because Apple and Burke are linked.
Okay.
So we're going to take it back to Apple. 45% Apple. I own 13% Apple. I lighten up my Apple stake. He owns 45. I would be hitting the bids on Apple. So I think I'm concerned, and maybe
do we get
it's
the
bounced
cane?
back.
Can we get the cane out?
The cane?
You're
Yeah.
going to cane me off the show?
What?
Do you want to buy Burke up here? Give me the bull
No,
case.
I don't.
Please give me the bull case. Chad, give me the bull
Dennis,
case for Berkshire
I wish
Hathaway.
I could come up with arguments again. Usually I can always argue with you, but you're right, and it's not good. I mean, also going back to the whole net asset value thing. Remember when Icon Enterprises? Remember when that had that big move, right?
Yeah.
And a lot of it was he owned the Apple. Remember when that thing? I wrote
He
an article.
deviated from NAV. His NAV on IEP. This is what these closed-end funds do, which is basically what Berkshire Hathaway is. The NAV on IEP was like 55, and IEP went to 155 or whatever it was, 149. It was over $100 over NAV, and they were giving it the premium because Uncle Carl was just, Uncle Carl, and everybody was on CNBC every other day talking about jacking prices, bullying companies around. Everybody's like, yeah. Now, I think this is not, that was an extreme example, but I just think this market is giving Warren Buffett just too much premium here now. Too much. For as much as they hold Apple, I think they're giving it too much premium, and it makes me worried. Like, you think about, I don't want to own anything really right now. I'm a little bit nervous. I'm 45% cash in the long-term portfolio. Do I want to own a stock at an all-time high? I mean, those are the kinds you want to own, but
can I offer the bull case here? So we've limited this entire conversation about Berkshire Hathaway to the public portfolio, right, to the stocks that they own. But
sure.
The Apple is only one. It's a big pillar, but it's only one pillar of the Berkshire fund. He's got the insurance, he's got the transportation, are the other big pillars there. So this is an infrastructure play too. We don't have as much visibility into that in terms of how those holdings break down and what the overall percentages of those holdings, because they own the entirety of a lot of companies, right? They've got a large private portfolio. But transports, infrastructure, insurance, those are the other big pillars. It's not just Apple. If Apple's 40% of the stocks that they own, but there's more stuff here. It's not just stocks. It's not just
what is it of the overall? So that's a good argument.
I don't know.
Of the fund, like break it down. Like, do we know what the private?
What to say?
I don't know what the overall weighting is of.
That's what I've always understood, that it's 45% of the fund. So you're telling me it's only 45% of the stocks, and there's a huge portion that aren't stocks. I know he's own stuff, but I thought it was 45. People are touting it. That's 45%. I thought that meant of the 45% of the fund.
Right.
That's a completely different animal.
It could
do more homework then.
Even if it is 40%, and it very well might be. Transports, infrastructure, insurance those are the other big pillars here. Let's not discount that. Looking at the stocks that Warren Buffett owns, Apple probably is 40% of the whole thing, because a lot of these holdings are, the majority of them, frankly, are less than 1% of Berkshire Hathaway, right? Or 1%, right? So there's only 4 stocks that have a 7% weighting or more in the overall portfolio. So yeah, it probably includes everything else, but let's not discount everything else. All right, infrastructure decade. Joe Biden said it. His lips to our ears. I'm just saying,
that's going to take a while to filter through, though.
Forget about that.
Boom, bridges don't go up overnight. I mean, it takes a while too.
Anyway, all right. I before we bring Tim on, I want to talk about Affirm quickly. AFRM. Okay. This is a weird headline. I saw this over the weekend. So on Friday, Affirm was marketing a bond sale, an asset-backed security bond sale, and they halted the bond sale in the middle of the sale. Like, they had already sold some bonds, like some tranches, and then they halted it midway through, which is kind of weird. I saw Danny Moses tweeting about this. If you don't know who Danny Moses is, all you need to know is that he was involved in The Big Short. He was under Steve Leisman, whose character was played by Steve Carell in the movie. And he was tweeting about Affirm over the weekend, not in a good way. So this is a weird. I'm not super familiar with the bond market, but I don't know how frequent it is to see a company do a bond sale, and in the middle of the sale, just be like, nope, never mind, stop.
Yeah, you know why?
Why?
You know why?
Why?
Because no one was buying them.
Well, they already sold some though, so
What
they
a
had to,
terrible.
they had to like take it back.
You
Yeah.
want to talk about from bliss to piss in a heartbeat. That is this stock. Because back in November, $176, I was trading it too. And I was like, the bull train was there. Talk about an epic collapse. I mean, $176 is now $29. The company was supposed to disrupt MasterCard and Visa and all the payment companies. This buy now, pay, whatever it is, pay later.
I know.
Was going to change everything. And when it really started to get ugly was when they came out and their delinquencies were so high. You remember that? That was just after November. They came out and the delinquencies were like running at like really high rate. And it's like, wow, do you think that's, obviously you're not going to a clientele. People are buying something and paying later. You think they're going to miss the payments, a few of these people? Potentially. So the whole business model, I remember talking about on the show that day, and it was like $150. And I was like, this is not good. It's been straight down ever since there. What a screaming short that was. And when was that? Do you remember? If he's looking back to the pro right now, I think Spencer is.
No, I realized I said Steve Leisman, and I meant to say, what's the guy's name from The Big Short? Not Steve Leisman.
Sorry. Steve Leisman's the CNBC guy.
Yeah, I know. No. Steve,
I can't remember.
Iceman. Oh, it was close. Leisman, Iceman, whatever. Close enough. Half credit for me. Good catch, Joe. No, what was the question, Dennis? And then I'll bring Tim on.
When did Affirm come out with delinquency rate high? It was like November. Like there was like
it's got to be right around.
Media. It was on CNBC. It's like the delinquencies were so damn high.
November 9th or 10th, 8th, 9th or 10th.
I think so. In there.
Yeah,
people weren't paying later; they were paying never.
Yeah, it was. Let me find it in the pro.
Anyways, that was the selling opportunity. That was the time to say this business model might not be as strong as we think it is. And now it's $29.
Yeah, that's right. All right, let's get Tim Quast on here. It is Monday, and on Monday
we need help.
We bring on Tim Quast for Market Structure Mondays. Let's do that right about now. Tim, good morning.
This thing up.
Good morning. Happy Monday, guys. So
Monday.
Nothing is happy.
What's
today,
so happy?
Oh, everything.
All unhappy.
I've got to stop falling for the platitudes, tropes, and cliches that typify Monday mornings. So, Dennis, it's funny. We came back from Spokane yesterday. So we didn't have groceries in the fridge. So we bought some Thai food, and we had the option to pay it in installments. I mean, that's speaking of Affirm. The fact that you can buy everything from your Thai takeout to your furniture in installments is a remarkable thing.
That's crazy.
Yeah.
Tim, I don't know if you're listening to the conversation. We'll take it away from Affirm.
That's what I'm thinking too, Joel.
I want to bring it back to Apple because I want to see what I want to see what Tim's, market structure edge is showing on Apple here. I'm very concerned about Apple because it technically doesn't feel healthy to me. I'm so concerned about Apple, Tim. I've held Apple in my long-term portfolio for a decade, and I realized I sold a 25% of the position, which I never thought I would sell.
Wow.
But last week at 162, I was like, I'm too nervous about having my portfolio 13% Apple. So I lightened up. It had just grown into that. I bought it like a long time ago, and I'm like, I never wanted to realize the gain because basically the majority of it was gain. But I'm just concerned. And I don't like the technicals. It doesn't feel healthy to me. The valuation isn't cheap. And we're in an environment where they're hammering a lot of stocks, and they hadn't really hammered it yet. They're starting to hit it now. Yeah. What are the what's the market structure that's showing on Apple?
I bet you it's got to be like a 2 or a 3.
No, he keeps betting. I want not bias it. Well, it doesn't matter. It's a system, so we don't have to bias.
Market structure is predictive, so it won't necessarily reflect what you think. But I'm reminded, and there's always something that will trigger a thought for me, which I'm not sure is a good thing. But
he's trying. Tim's trying.
I laughed. It was funny.
I remind so because we were exhausted. We had this big. My mother had an 80th birthday bash, which we organized as a surprise up in Spokane over the weekend. And so we had a flight out of Spokane at 5:40 in the morning on the Sunday when the time change occurs. So I didn't get any sleep. So we got back and we're watching this old movie. Because I spent a year when I was in college in Sri Lanka, and so I'm pretty familiar with Southeast Asia. Spent a lot of time in Thailand, and there's this movie called The Killing Fields, which is an absolutely fantastic movie about wartime conditions, and it reminds me in some ways of Ukraine. And I have a point about Apple, Dennis. I'm going somewhere with this.
Yeah, okay.
And so it's got some really, and it's a true story. That's what I think makes it wonderful. And there's this point where clearly things are falling apart there. And you think about Apple as sort of the stolid mainstay, the thing that you could count on. And they're in what we used to call Phnom Penh, the capital of Cambodia, which became Kampuchea for 4 years, just a disaster. And this British character, a journalist played by Julian Sands, says to the Americans, well, what I'm hearing, and he's British, keep this in mind, what I'm hearing is the place to be is the French, the French consulate. And they said, well, where are you getting that news? And he said, from the British consulate. And keep in mind that he's British. So it's gotten so bad that the Brits are saying, no, hang out with the French. And I think in the markets, things are so bad that even the committed Apple folks are saying, well, let's go shift to energy, right? It's gotten that bad in the market. So let's go look at Apple. Maybe that fell flat, but if nothing else,
it's a good movie. All I know is
it's a good movie. I'll say one thing too, just on and this is just my recollections of talking with with Gene over the years and stuff. I mean, I'm not saying they're moving away from the iPhone, but I think that they hopefully they're looking to diversify their income stream. And I don't know what's going to be part of the metaverse or where they're going, but they're working on something. They're not just going to be that dependent on the iPhone. What that's going to do in the interim, with the stock down 1.82%. But I just wanted to share that thought. Go ahead, Tim. What's market structure have to say?
So, and for people new to market structure is the mechanics of the market. It's shifting your thinking from, well, what are the fundamentals of the business, their financial performance, their management, their long-term prospects, etc., or the technical charts. And it says, let's look at how the mechanics of the way that money gets into and out of the market affect prices. And before I get to Apple, here's Affirm, by the way. And to your point, Dennis, so when it spends a lot of time above 5, this whole time above 5, the moment that it breaks below 5, you should leave. You could even say when demand begins to fall. So this is price, this line's price, and then the green section, that's demand. And when demand is above 5, it tends to be excess. And if it's at 10, wow, that's a momentum stock. So when demand begins to fall, you should beware. It will tell you what's coming. Market structure, the mechanics of the market will tell you what's coming. So if demand falls and supply increases, see, it's over 50% short, the likelihood that you continue to produce gains diminishes, and particularly if it drops below 5. And look what it's been. It's been absolutely miserable. The one time that it was ticking above 5 was right when broad market sentiment was at 7.5. Don't buy that. The broad market's already telling you the whole market's going to go down. Month-end window dressing. Passive money was getting rid of tech, and I think we need to talk about that. So it's been miserable, and it's still miserable no matter how much it's come down. You say, well, it can't go any lower. Well, sure it can until this equation changes. And there are points in time when change occurs. One of those is setting up this week, options expirations. That's when things recalibrate. And you could look at it after that and say, is money coming back into Affirm? But until that point, and unless that occurs, don't do it. There's no reason to buy something because it went down 50%. That's not a good reason. Okay, so let's go look at Apple.
I just want to stop you there. I mean, that's such a good statement to say. And this is like human nature to want to get a deal. Right. And you coming out and saying there's no reason to buy something that just went down 50%, until you start seeing some life. And I mean, that's what people want to buy the bottom. They want to think, okay, Alibaba can't go any lower. Maybe we'll go look at Alibaba after Apple. But I mean, this is what human nature does. I mean, this is, when you start trading, every trader thinks the same thing. I want to buy on the cheap. I want to get a deal. And then you realize, as you get further in your trading career, that it's tough making money when buying stocks that are going down.
It rarely works out. It just, that's one of history's timeless lessons. Buying stuff high and selling it low is not a good way to make money. Time tested. So this is a 1-year look at the supply and demand in Apple. So once again, here's price, and we're just taking the closing price. And then the demand is the green line. And the more time stuff spends above 5, the better it tends to do. Things that spend a lot of time at 5 tend to be platform stocks, foundational stocks that the market rests on. Well, Apple was only below 5 for 2 stretches here between March of last year. So here in May, which was a tough time in the market, people really got hurt in May. That's where the momentum market ended. I've said this over and over here on Market Structure Monday, that we have returned to where the market was in May, same price right now as it was in May, because that's where the momentum market ended. Now we'll find out whether we can get our footing again. The only other time that Apple spent any time below 5 over that whole period was in October or September, October, the transition last year. Also a tough time, also a point where the broad market was top. Now look at how the momentum has broken down. This does not look terrible, but Joel, to answer your question, it is a 4.2 and descending. So demand is below 5, not good, and falling still. And so you want to buy rising demand and sell falling demand. That's generally a rule. There are nuances to that. And then if you look at the supply side, the long-term trend in the supply side, short volume, the supply chain is producing too much and there's not enough demand. Well, what will that do to prices? It will deteriorate them. It's not horrible. I'd look at Apple and say, well, it's nothing like Affirm. It's not going for 30 days at 1. It's not bad, but it sure isn't what it used to be. And so will it reset after options expirations and indexes recalibrate? That happens Friday, in and around. It can't all happen on one day. That's going to happen around Friday. Options expire Wednesday, Thursday, Friday. New options trade next Monday. We can talk about that next Monday. But it's not terrible, but you can understand immediately why Apple is not performing like it did before. And it may or may not have anything to do with the business fundamentals. It has to do with insufficient demand and excess supply. It's that simple.
So how do we know when to come in on something like this? Like, okay, so Apple, you wouldn't come on something like this. Is there anything, when you're looking here besides energy maybe, but is there, what do you like right now, Tim? Like where should we be putting our money?
Yeah, what you want to do, to me, 3 simple principles. Where is the money going? We can look to see where the money's going. What's best among the things where the money is going, and what's occurring around us? Are options expiring? Are indexes rebalancing? Is it an earnings season? All of those will affect the amount of speculation, which can disrupt the way that prices behave. So that's always the backdrop to me. So then for edge users, that this is the command central is the dashboard. Let's look across here and see where the supply demand equation indicates money is going. And it's not very good. I said this morning, there's either a paucity of trading opportunities or an abundance of misery, whichever way you want to look at it. But clean energy, there's one thing that has excess demand and at least constrained supply. So that's where you see right here. There are only 9 companies. It's a portfolio I set up, and I just put these components in here. But see how strong the demand side is and how reasonably constrained the supply side. It's not great, but look at it relative to cloud computing, where demand has just not been good for the last, call it, a month. And so if I look at clean energy, then what I'm going to do is that where's the money going? Now I want to find the best thing in clean energy. Well, frankly, if I looked at this, I'd say probably fuel cell. Now it's a very low.
Here we go again with the fuel cell and the plug
Oh my
power.
gosh.
All right.
It's actually been holding up. He's right though. Look at the chart.
It's been great. So it's been above 5 since February 4th. It has outperformed the market, and it still has very strong demand. And heading into options expirations, supply is declining. Now that's not an absolute. There are exceptions to the rule. There's just a central tendency. That would tell me that generally money remains committed to fuel cell. I will tell you stocks that are below $10, that the data volatility is greater. There's higher risk in it. But if I'm looking at that, that's the kind of stuff that you want to own. You want to own excess demand, not excess supply. So that's one example. And it's, you could look at, where else is money? Unsurprisingly, energy still looks good. The energy sector has about 140 companies in it. You'd think there'd be a lot more than that. But in the national market system, that's the component. You said, well, there are 300 energy companies in Houston. Yeah, but they're not all in the national market system. So here, see, the demand curve is beginning to come down, but look how strong it is versus the axis of 5. The supply side's ticking up. It's not great. You're not going to go get like you did, in the last week, stocks like NOV, used to be called National Oilfield Varco, not National Oil Well Varco, NOV Inc. One of the best performers in the market. Is it going to deliver the same kind of return? Well, no, you're at the kind of the top of the Ferris wheel, but that still tells me until we get to options expirations, money remains in energy. No surprise. There's no surprise. That's where the money has been. But I'll tell you, it is tough to find good stuff. And all you have to do here is look at the demand side. All of these curves are just struggling even to get to 5. Well, it tells you that at this point, in all the great complex of regulatory accounts, retirement accounts, people are still backing away from stocks, and that's affecting the market. Now, will that change after March expirations, end of the first quarter? Could. I don't know. We're going to find out.
Tim Quast joins us every single Monday from Market Structure Mondays. His platform is marketstructureedge.com, and we were getting some questions, repeated questions in the chat about, can you get a discount? Spencer, get me a discount. Get me a discount. Okay, I heard you. I've gotten you a discount, and I'm going to put the code up on the screen right now. It's Edge Prep 20. Let me just put it up on the screen right now. Edge Prep 20 to get you $20 off your Market Structure Edge subscription. There it is. That code expires the end of this week.
It does.
So you have 1 week, 1 business week, that is. It expires, I believe, on Friday. That's the 18th? Yes. So that code, Edge Prep 20 from marketstructureedge.com. Tim, always a pleasure. Thanks for joining us.
Have a great week, you guys. Good to see you.
You didn't talk me off the ledge, though.
Allow me to do that right now. There will always be. This is my bull thesis for the week, or for the day, my rant for the day, whatever you want to say. There will always be reasons to be afraid. Pick your poison right now. Go up and down the menu. There's many reasons to be scared. We have a war, a major war right now. We have inflation. We have a hawkish ECB last week. We have a Fed meeting this week. Lord knows. I mean, we know what they're going to say. They're going to raise rates, but we don't know. We don't know much more than that. We have all the stuff that we talked about with China. We have supply chain problems. We still have COVID, as evidenced by a lockdown over the weekend in China. There are lots of reasons to be afraid, and that makes this normal, because there is always lots of reasons to be afraid. That's okay. Sure. That is okay.
Let's back up the truck and just buy stocks. Let's go all in. Is that what we want to do?
I didn't say that.
I don't know either. Part of me wants to do that, though. Part of me wants to. It's a great point you're making. Part of me wants to ignore all this stuff and say, look, long term, it's going to be okay. It's always been okay. Why would you not come in and just buy some stocks today? Do I want to buy Alibaba? I'm not sure. It looks like I just got a trader notified me. I'm not sure if we have verification on this, but it looks like JP Morgan just downgraded Alibaba to sell. Do you have that? Ask the news desk. It just came across just like 2 minutes ago.
Okay.
I'm not sure where that's from. Like, I'm not sure. Like, it's a trade. So one of my buddies just said JP Morgan just got downgraded. So, or not JP Morgan. I'm sorry, Alibaba just got downgraded by JP Morgan.
All right.
So it's 81.5 now. Now you got, and now, like, I don't know if this is, we don't have this verified. News desk is looking, but I mean, you're downgrading this now. Now we're downgrading Alibaba at $81 a share. Wow.
You want to hear something interesting? While Tim was on there, you know who just raised their guidance?
Who?
Affirm.
Did they?
Literally while Tim was on, Affirm just came out and they raised their sales guidance for the quarter and for the year slightly, but a raise is a raise is a raise.
Stock's not rallying.
It did. It spiked off that.
To come back down. I looked at it as 29. It's 29. Oh, okay. I guess it's off the lows. Still down 6% on the day. Yeah. See the little spike, Joel? Wow. That was short-lived.
Hey, Joel, you're on mute.
Joel.
They're like, okay, the bond thing didn't go well. You got some good news? Like running around the office, like, let's get some good news out there, folks. But no, that made a new all-time low. If you're trying to scoop it up, pre-market low. I'll give you the pre-market low. That's a potential level, 27.65. And if you're looking for a gap fill, the bottom of the range, the old-time closing low, 30.78. So you can see that on a pop. People get excited. 30.78, 30.76.
Look how quickly, like, I can't even, like, if that's the bar, look how quickly that got sold.
I know. Wow.
Like, they can't even go up for like 5 minutes on that. Like, It rallies to 32 on the initial headline, and then they just hammer it down again. There's so many victims in this stock. Call them victims now. I mean,
Spencer just moved
not
the
even bag
scores
holders.
up.
They're like victims of FOMO. Is that an all-time low for a firm?
Yeah. Oh,
yeah, it is.
Yeah. Spencer just moved the S&Ps with his little positivity thing.
I think he did.
Look at that.
This. We're blasting off. We get a headline from Ukraine or something.
Oh yeah, the war's over. Didn't you hear?
Oh, that's good news.
Yeah.
Now we can worry about China and interest rates.
Anyway,
I don't know what to say. All I could say, the only thing we promise you is going to be a lot of chop. I'm going to sell the rips. I'm going to buy the dips. I'm going to be trading it. Investing wise, I'm sitting with dry powder. I'm not going all in. We know I did some reallocation. I think I'm still just sitting back from an investing standpoint. But I will tell you from, a trading standpoint, as much as we've been, talking, there's a lot of opportunities on from a trading perspective. Just selling, like Affirm, goes up 32, it's gone. It's right back down. I mean, there's just so many opportunities from a trading perspective. There's so much chop right now. I think you got to take advantage of the chop. Take the money when you got it. You get the nice pop, you buy the stock, it goes up 6, 7, 8%. Take the money and run. That's the way it's working in this environment.
2 minutes left in the show. We'll do some ticker time. Kevin Blair asks thoughts on Google. Sure. Let's do Google. Alphabet, whatever you want to call it.
Biggest position, almost the biggest position in my long-term portfolio. Love the company still. Again, everything is just out of favor right now. Is it cheap? It's cheaper than Apple. It's not cheap, though. Maybe relative to itself. But that's the biggest problem is nothing is really cheap. That's why I keep coming back to. I'm like, we have all these worries, and all these worries existed in the financial crisis, but stocks were dirt cheap. All these worries existed after the tech bubble burst, but stocks were dirt cheap. All these worries exist today, but stocks aren't dirt cheap. So that's the biggest difference. It's like, it's hard to just come all in here and buy expensive stocks in an environment with all these worries. They got to get cheaper, I think. I go back to Cameron's interview. The stocks aren't cheap. And she was just saying there's been no signs of capitulation. I kind of agree with that.
I'm going to go just technical on you here. And, it's hard when you have a $2,600, $2,700 stock. But really this, where are we trading at? We're trading at 26.12. Huh. until we could, wow, look at these 3 highs, man, 26.70. I mean, until you, I know, wow, that's $58 away. Man, that's major resistance today. Until that thing can get, well, who knows what the market's going to do today, but I don't know. That's a big number. Until it gets over 20, let's call it 26.75. I say the path of least resistance is lower, and you have 2 lows here at like 2,600. You're only $12 away. You lose 2,600, and man, you got nowhere to go in this thing. So 2,600's got to hold, and man, if you see this thing at 26.70, 75 today, then that's gonna be some major resistance.
It's just a good point. New York Giants saying 22 PE is not cheap. And I mean, we've been in such an environment where you see something with a 22 PE and you're like, wow, that's cheap.
Thank you.
Where is the historical? Let's go to the S&P. Historically speaking, where is the average
We're
PE
still high.
for the S&P?
What is it? 15?
This people don't realize this.
What is it? 15?
15.
Yeah.
15. You know where it got to after the financial crisis? Like 9.
8 or 9, yeah.
8 or 9. So, I mean, 22 is still way over historical trends on just if we just compare it to S&P. And I'll say Google is like an S&P stock. It really is big. It's a huge part of it. So we should be giving a huge premium on stocks. I love Google. I still own the company. I haven't sold any of it. But, you know, I sold some year, but I haven't sold any Google in like probably 7 or 8 years. It's grown to a big part. I think I'm up like 1,000% in it. It's been really, really good. But am I coming in and buying it right now? It's not cheap.
No.
Not cheap.
All right, I'm going to hop here. Good job today, Dennis. Good job, Spencer.
Joel, before
I
you
think
go,
bad job by me. I was
Joel,
bearish
before
on
you
everything.
go,
Stocks are starting to go up.
Happy Pi Day, Joel.
Oh, okay.
Pi Day.
That's
What's
right.
today?
That's today. Happy Pi Day, Dennis.
What is a Pi Day?
March 14th.
314, Dennis. Let's
Yeah.
go.
I don't even know what that is. There's
Wake
a
up.
Pi Day?
Come on,
We have a
oh.
Pi Day now?
Yeah.
Is it?
3.14159265 is as far as I can go. All right, you didn't get it. That's fine. We're done. Dennis,
Oh, pie, like pie. I was thinking like eating blueberry pie. I'm always thinking with my stomach.
yeah.
I was like, do I get to eat pie today?
You can. That's the beauty of it. Do whatever you want. All right, we're done here. Oh my
God. Flunking math again. I know.
That felt horribly.
One for the road. Buy some bling. Get some bling going. Look at that.
Swag.benzinga.com, guys. Don't tell Joel, but that shirt is on the store. But don't tell Joel. You can. People have asked in the chat today, how do you buy that shirt? It's in the swag store. Swag.benzinga.com. Shh. Okay. We're done. We're going live next with live trading with Benzinga. Mitch is out for the first half of the week, and he's out for a good reason. Mitch, along with a couple other guys from Benzinga, are down in Austin, Texas, for a combination of South by Southwest coverage, and also they're getting a tour of a certain EV factory down there. I'm not going to say which one it is, but we'll have some content about that out next week. So Aaron Bree is hosting live trading today with Zunaid and Ryan, going live right now. We're done over here, so smash that like button, please, on YouTube, on Facebook, on Twitter, on Twitch, even on LinkedIn. Thanks to our guest today, Tim Quast. Please remember that all the information from our show and all of our shows are meant to be used as informational purposes and not for investing or trading advice. And that's a wrap. Oh, you know what I need to do before we go? We are on the literal doorstep of 150,000 YouTube subscribers. We're like 20 away. I'm not joking. We're going to figure out a way to celebrate that nice round number. I don't know what we're going to do yet, but if you haven't subscribed to our YouTube channel, you can be the 150,000th Benzinga YouTube subscriber if you subscribe in the next 5 minutes. So do that. I'm done. Everyone, good luck at the open today. Stay green, make some money. Catch you guys later.